Hey everyone, this is DayTraderRockStar from DayTradingRadio.com, and today we're going to talk about how to trade a channel. Now, a channel is a very important pattern that we trade on the station because it gives us an early entry. It's a very a good risk-reward type of trade where you're buying on a low-risk entry, and it's one of the best patterns out there to trade. Now, what I like to stress is the education. It's easy enough to recognize the pattern after the pattern's formed, but to understand how a pattern develops is so important. So I want to show you a little bit of how to develop a pattern. So I look for 3 points on a chart, 3 pivot areas. This is an area where the price moves from a move down to a move up, or a move up to a move down, which I call a pivot area. And if I have 3 pivot areas, then I can start building a chart. Now, this is way before a lot of people start to notice a pattern start to thing. Once I notice 3 pivot areas, then we can start putting things together and starting to really analyze a chart. So again, here's your first pivot area, here's your second pivot area, and here's your third pivot area. And with that third pivot area, we got 3 points. Now, as you know, or should know, when you have 2 points, you could basically make a line. All right, that third. So what we're going to do is we're going to take that pivot area, and we're going to draw a line. And for a rule of thumb, I usually use the body of the candlestick. All right, so I use the body of the candlestick for charts. And when you're a chart reader and chart trader, you let the charts tell you what it wants to do. You don't get too involved in oh, this is off by a penny or a couple cents. What you want to see once you start to establish a channel, you really want to believe in that channel. So once you have that one line, it's key to be down here to 2 points and 1 point up here. It could be the 2 points here. Really doesn't matter how it is, as long as you have 3 points. You take that other point, the point that's opposite the other 2, and you draw what we call a parallel line, a parallel trend line. So you don't really have a trend line here. Now, again, let's go back out here a second, and let's pretend that we haven't seen. We just got to this point right here. We got to this point, and we actually got to pull back. So at that point, we could drop that down, and at that point, we already have this area. So what I'm going to do is just draw a parallel trend line that basically goes equal distance. A parallel trend line is an equal distance between the top trend line and the bottom trend line. And as the trade moves on, we are going to take the trade when it comes down to the lower trend line. Now, on the station, I also use what I call the 5 indicator method. The 5 indicator method is using other indicators. Stochastics are my main indicator, 200 period moving averages, trend lines are one, and recognizable patterns. And hence we're doing the channel today. So the recognizable patterns, the channel, the lower trend lines, already established because we have a recognizable channel. The oversold stochastics, to be oversold, I want them under 20. So this trend develops, and when this trend line and when this price comes down to where we extend that trend line out, we take that trade. Now, you can see the stochastics were set up fine, and you can see how we came right down to that level and bounced right off of that level and pushed right back up here. So that's exactly how we're going to measure our entry. We're buying on a pullback, and this was a great trade on the site. This was McDonald's. We knew exactly beforehand where we wanted to take the trade. We already calculated it out. Once we got the confirmation reversal, that large outside day candlestick here was just an easy trade now, and that trade just continued to move on. So it was a nice, beautiful trade from the lower trend line right up to the top of the trend line. Now, you can pretty much do this on any type of pattern. Once you start to establish that technique, you can look at any chart here, and we're going to go back and just build this. So we're going to just once you start to see what you're looking for, you're looking for 3 pivot areas. All right, this is the first pivot area right here. Here's the second pivot area. And again, this would be the third pivot area. And again, this is after the fact, but I just want to show you how to construct these. And again, you want to remember that this could be any point after this point. Once you start to see that pivot area starting to play out, and you start to see the market pulling back, automatically you have that 1-2 point there. You draw that trend line, and once you have that third point, in this case number 2 pivot, you just draw a parallel trend line. And again, the parallel trend line, we want basically to be near the closing bars, or just the closing range of that bar. I don't use the tails of the candlesticks. I use the bodies of the candlesticks. So again, you could see that trend line came down, and this was another great trade we took off of. Well, this whole sector was actually a good setup, but the whole sector set up like this, and this was TRV Travelers, and you could see how this came down, bounced right off of that lower trend line, and then exploded up off of that pattern. So another great example of how to build a channel and trade into it. And this is exactly where you want to, take that trade, is right into this level. And let's go over one more here. And again, you can see me trade these setups each day on the radio at DayTraderRadio.com. All you do is live and free, and all you need to do is just tune in, and what you see is what you get here. You'll see these patterns play out. I explain the education as it's happening. The channels are very important. Again, I'm just looking at just looking at this right here. I can see there's a pivot area there. There's a pivot area here. And there was a good pivot area right in this area. And from that point on, you got two pivot areas. You want to draw that one trend line straight down. And then from the third pivot area, I want to draw that parallel line. And you can see exactly, well, and again, another trade we took on the thing, and again, measured it out. We talked about, watching that lower trend line, giving us an area of interest. When we come down into that level, we want to start buying into that. Stochastics were oversold, which gave us a great setup here. Multiple indicator setup, trend line, oversold stochastics, 200 period moving average right in the area, recognizable pattern, a downward channel, all combining for a multiple indicator, or what we call a high probability setup. And pretty much, one of the best ways to make money in the market. Instead of being unorganized, be proactive in your trades, know how a pattern shapes up, know how to trade it, know when to get in it before it happens. That's the key to being successful as a trader. Hope you enjoyed this video. Please visit DayTradingRadio.com. You can click on the video if you like, and it'll bring you right to the station.